Hey, welcome back. Most people look at Bitcoin charts and see noise, but if you know what to look for, the story is crystal clear. Patience, scarcity, and conviction win. Today I'll break down the key charts every investor should understand in plain English so you can cut through the noise and see exactly where Bitcoin could be heading next. So referring to this first chart, the long-term Bitcoin price chart, as you can see, you always need to zoom out. Bitcoin's growth becomes obvious. Despite short-term volatility, the long-term trend shows resilience and increasing adoption. For investors, this chart reinforces why Bitcoin should be viewed as a multi-year allocation, not a quick trade. Long-term holders have historically been rewarded for patience. Now, this is actually important because Bitcoin should not be confused, as I just mentioned, as that speculative trade play. It's more as a long-term hedge and treat it as a long-term vehicle in order to create that intergenerational wealth for your loved ones as well as for yourself when you reach, let's say, the statutory age of retirement. So this is the purpose of this chart. Now moving on to this next one, which is interesting, it's called the Bitcoin exchanges balance. Now what this would mean for investors in terms of how they would interpret this chart. Now tracks how many coins are actually sat on exchanges at any moment in time. Now you can see that the rising balances usually mean that more coins are made available to sell, creating a potential downward sales pressure. Whereas falling balances, if you're looking towards the downward direction of this chart, it suggests that investors are moving Bitcoin into self-custody, which is a signal of conviction and reduced sell pressure. For portfolio decisions, is actually a gauge of supply dynamics and potential market sentiment. Right, the next chart is Bitcoin Sharpe ratio versus other assets. Let's break this down as to what it actually means. The Sharpe ratio actually measures the return versus risk. So the higher the Sharpe ratio means better risk-adjusted returns. If you compare that with Bitcoin's Sharpe ratio with other assets like equities, bonds or gold, it helps investors understand whether the reward justifies the volatility. If Bitcoin consistently shows a strong Sharpe ratio over a period of time, it validates Bitcoin as that serious portfolio asset, not just a speculative bet. So that's the key point of this chart. Now moving into this empty growth global chart, what does this actually mean? Now this chart links Bitcoin with the global money supply growth. When central banks expand liquidity, Bitcoin has historically benefited, acting as a hedge against monetary expansion. For investors, it's a reminder. Bitcoin's bull cycles often align with loose global monetary policy. Watching liquidity trends can actually help time entries or manage risk. So you might have recalled in various of my episodes in my channel, which is all the more reason why you ought to subscribe just to learn a little bit more. I usually give some macro feeds and insights, particularly when we are looking at the FOMC meeting with the Fed, whenever they engage their 12 local governors, district governors, to make monetary policy decisions like the Bank of England does, as well as the ECB, the Bank of Japan, and other leading economies and central banks. Are usually comprised of a set of individuals that's based on a set of macro data like inflation, job reports, and GDP and debt. They take all of that data and every month they convene and decide what's the funding rate, the actual interest rate they would set for their economies. That whenever they make a drop of interest rate, which is where we currently are at the moment, we're in the quantitative easing stage of monetary policy decision making by these central banks, that usually means a great opportunity for corporations, particularly those mid-tier cap companies, where they can borrow cash or capital at a lower interest rate because the central banks establish what those funding rates are for the entire economy, right? So this is very important. So the lower the interest rates usually would mean companies and investors such as you and I would actually can borrow capital in order to make investments, let's say into Bitcoin or into other interesting hard assets or other types of assets, whether it's equities, commodities, as well as crypto and Bitcoin. So this MT growth global chart is rather important and is part of broader decision making that investors would usually rely on to make those capital allocations and investments into those assets, right? So this is usually the most common indicator, this MT growth global chart. Next one is continuing on the same theme of the M2 money supply. In the case of the United States, we can see that it shows the US money supply over an extended period of time, over many decades. So this steady rise that we are seeing shows how fiat currency supply expands endlessly. If we contrast that with Bitcoin's fixed 21 million cap, and the appeal becomes clear. For investors, this chart underscores why Bitcoin is increasingly treated as a digital hard money compared to fiat's constant dilution. Another interesting chart that I found here is this Bitcoin versus major assets by market cap. Now this chart ranks Bitcoin alongside stocks, gold and other assets by total market value. It's currently sitting at 8th position. And it's just a moment in time where I can easily see the Bitcoin demonetizing silver. There's not much difference between them. If you look at the current market cap for Bitcoin is $2.2 trillion, whereas silver is 2.3 and the max 7. If you look at Amazon and Google, it's 2.4, 2.9 trillion between them. There's not much of a difference. So I wouldn't be at all surprised if by the end of this year for Bitcoin to rise up towards 5th position, even demonetizing silver, Amazon and Alphabet. So the intention of this chart is to highlight how Bitcoin has grown from niche to competing with the world's largest stores of value. So for portfolio construction, it shows the upside potential is endless. If Bitcoin captures even a fraction more of gold or equity market share, valuations could climb significantly. So that's really the bottom line of this chart. It's rather interesting. The next and final one that I usually track and follow is what we call the Bitcoin Fear and Greed Index. Apologies, I haven't actually changed the title of this slide. So it talks about the Bitcoin Fear and Greed Index, which is one of the simplest ways to gauge market sentiment if it's in bullish territory or likewise in the bearish territory. So when the index is deep in fear, investors are panicking. But that's often when long-term opportunities emerge. Inadvertently, when it swings into extreme greed, it usually signals overconfidence and overheated markets where risks rise sharply. So the key from this chart isn't to blindly follow the index, but to use it as a contrarian signal, a reminder to keep emotions out of investing decisions and to stick to disciplined strategy. Again, I keep explaining in all of my videos is we need to become more of an intelligent and resilient investor, particularly when we're making our own capital allocations and investment decisions into these type of assets. Not just with Bitcoin, in fairness, but in all types of equity stocks that we may also invest in as well. There's no different. We need to have that high rate of conviction, and that is key whenever you make these investment decisions, because in the short, medium term particularly, it's very difficult to determine because we don't have a crystal ball. That's the point, right? So there's always going to be market volatility. There's going to be black swan events. There are going to be shenanigans instigated by politicians that we don't understand or have visibility of their true intentions or hidden agendas, which makes it even more difficult. And even the economic debacle that may be out there, the entropy, the chaos, the wars that we're currently still in, unfortunately, those are all the more reasons why we should just cut ourselves from the noise and the market sentiments in any moment in time, and just to stick to your own convictions and to those investment decisions into the long term. And for me, Bitcoin is the ultimate hedge against all of that noise, all of that entropy and chaos, market volatility, black swan events, shenanigans, and so on. So I can't emphasize enough that we need to become more intelligent and keep our emotions at bay. That is the point. And whenever this happens, which will happen, is to say, okay, no problem. I have some spare cash floating around. Why don't I DCA and add to my existing positions in my portfolio? Which is what I'm doing in the case of Bitcoin and maybe some high-graded equity stocks in AI that I currently have as well. So I use those as gifts. So dips are gifts and should be seized as a gold opportunity to add to those positions and DCA every now and again, and to hodl into the long term, because at the end of the day, we're going to be the ones left standing in terms of reaping the most of the rewards based on our own efforts and patience. So that is all I'd like to discuss with you today. If you enjoyed this episode, incidentally, please don't forget the like button, to share this video to colleagues, friends, and also if you haven't done so, to please subscribe to my channel, as I regularly publish some mystery videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.